Hello nieces, hello nephews, it's your Uncle Charles here, and today the S&P 500 decided to show some more follow through after the breakout we had yesterday. Good news for the bulls, bad news for the bears, and we're going to talk more about this, how much longer this could last possibly. But first, here is the flow sentiment, alright? 73% in the puts, 27% in the calls. I have a filter for 200k premiums or above. 500k is a lot less contracts, and most of the big bearish contract came early in the day, while the bullish ones came later in the day. Okay, so just a little context there. We bring it down to 200k premiums. It's overall bearish. Okay, a lot more put contracts than there are for call contracts that was bought today. All right, so this is where I specialize in the price action technical analysis. Okay, so I have my Discord. Pretty much the plan for today is, I have a habit of trying to catch the second leg up of a up move, or whether it's an up move or down move. I try to catch the second leg up or the second leg down, and I try not to call the top or a bottom. So today the plan was, if SPY test 398, I'll only buy a call if it recaptures 400. Okay, and I put here above 400, 43 to 44 zone is my first target, with 48 and 410 incoming. All right, so that was the bullish plan. I had a bearish plan, but we didn't need to deal with the bearish plan because off rip, this is where I enter the call. You see on the 15-minute chart here that the SPY recaptured that 400 level. Okay, it opened below it, around testing that 398 level. All right, 398.4ish, and then it recaptured 400. That aligned perfectly with my plan. I saw the opportunity. I took a risk because no strategy is 100%. We still have to respect our stop loss. In this case, I did not have to respect my stop loss, at least not yet. I bought a bunch of contracts of calls, rolled it up to my first resistance. I had a target of 4.3 to 4.4 zone. That's my green lines right here. And you can see it hit that level, hit 4.4, and just based around it, never losing 4.3. I shaved off some profits, level to level, and left a runner. And when it broke 404, it treated that level as a support before breaking up to my next level. Okay, this was later updated intraday. I had a level around 406 before 408. We got pretty close to 408 though. All right, while it was basing around this level, twice SPY went up to 407. Okay, and rejected twice there. So that's pretty much a double top. Okay, so we got to be careful for tomorrow because intraday gave us a double top scenario. All right, so overall I only took one trade, a very stress-free day for me. One trade, profitable, and we caught about a $7 move. Okay, I took profits here, but I left a runner, so technically I did caught the whole move, and it was very, very nice feeling because that was the plan. Now, here's looking at the daily chart here. You can see I'm zoomed out. My multi-year trend line right there, the orange line. Okay, connected to January 24th, 2018 high to the February 2020 high before we had the COVID-19 sell-off over there. And as you can see, we continued here. And recently, and this is what I've been talking about for quite some time, but recently, actually yesterday, we recaptured that multi-year trend line. Not only did we recapture the multi-year trend line, we also broke out of this trend line right here, this green trend line that connects the April 21st high to the May 4th high, also to the May 17th high. We broke out of that. So we recaptured the multi-year trend line, the orange one, and this trend line that connected multiple highs this past year, also looking like a rising wedge. You can see here it connects the January 24th low to the February 24th low, and recently the May 20th low. All right, so it's looking like a perfect rising wedge. And of course, you guys been noticing this big old yellow bull flag that I had for quite some time. So in my opinion, based on this bull flag, SPY is just in a big, massive consolidation phase, a big, massive basing phase. Okay, so as of right now, I have a lot of reasons to be bullish. Okay, I'm still overall bearish on the S&P 500. I still needed to clear up some more levels for me to be overall bullish. However, based on these many patterns, bull flag, There's falling wedge, recapturing the multi-year trend line. There's a lot of reasons to believe, at the very least, the relief rally can continue. Okay? But I am a day trader, and whether I'm bear bias or bull bias, I will continue to play this both ways based on the levels, level to level, one level at a time. So for me to be bearish, I need to see some support levels fail. I had a support level, as I spoke on earlier, around 4.3 to 4.4 zone. If that fails, I may look for puts and ride it back down to that multi-year trend line, which is around 397 now. 396 to 397, 396.8 to 397. Okay? Also had some support around 400, so we got to keep that in mind. Okay? So, like I always say, best time to turn bearish or look for puts is when a support fails, starting with 4.3 to 4.4 zone. I believe if that level continue to hold, and if we can actually clear 406, okay, we can possibly go up and test a higher level. Now, that 406 level has served as a resistant level and a support level back in early May. All right, so I'm not surprised that 406 was a tough level to break through. But if we can break through that, we can possibly go test that 408 to 408.5 level. That's this May 17th high right here. All right, a break of this high can possibly be a good sign that we can get another high up to 410, possibly 412, then 415 before another pullback. Okay, there is a level around 418.5 based on my Fibonacci level. Okay, so like I said, above 404, I will continue to be a little bull biased because of all these nice breakouts and recaptures that we have. If we lose 404 to 403 zone, preferably 403 to be safer, I could see this dropping back down to 400, you know, back testing wise. Then back testing this multi-year trend line. Because remember, you clear a critical level, it's healthy to watch it be back tested. So this multi-year trend line was cleared as a resistant. To see it back tested as a support would not be an unhealthy thing, and I wouldn't sweat it. I'll still play it level to level, but we'll see if that holds if it back tests, okay? And below that, I would favor new lows. So the last previous low was around 380 to 381 zone. I would favor it go even lower than that if we lose that multi-year trend line again, around 396.8 to 397, okay? But let the 4.3 to 4.4 zone serve as a reference point before you guys make any decision, okay? If it holds, I want to see it break 4.6 to put upside targets in play. All right, if 4.3 fails, I think we can go back test some more lower support level, 400, 397 to 396.8. Okay, does that make sense, guys? Please comment below if that makes sense. All right, here's the VIX. I've been saying about it's struggling to clear that 29.7 level for quite some time now. You can see all those strong wicks. And it finally broke below that 50% retracement level around 27.57. So VIX continue to show bearish price action. A bearish VIX is usually a bullish SPY, guys. So VIX to be bullish, VIX need to recapture that 27.57 level, 50% retracement level, clear that 5-day moving average at 28.6, and of course clear that 29.7 level. Very tough level for it to clear. All right. If not, and it continue to stay below 27.57, that's bearish. And it could possibly come down and test this triangle pattern, the support of the triangle pattern, which is around 25.97 to be exact. And if that fails, that's a breakdown. Okay, a breakdown for the VIX is very bearish. Could be a good sign for SPY bulls. Okay, just something to keep in mind. And look at that. QQQ managed to clear. I had a resistance around 293.5, and it also cleared the resistance around 295.85. Those are now supports, by the way. I wouldn't turn bearish yet unless those support levels fail. Of course, there is a big level up here around 301 to 301.6. That's based on a 23.6 retracement level, but also this white downtrend line. All right? Put it this simple. QQQ above 301.6 is extremely bullish. It's a recapture of this Fibonacci level and a breakout of this downtrend line. Could be a sign that a bottom is in. If we can clear that, still got to watch for false breakouts though. All right. But if we get a rejection there and we see support get taken out like 295.8 and 293.5, that's a clear sign or a bearish sign that we could see more lows, possibly even more low or newer lows. So the previous low was around 280. We could possibly go down lower than 280 on this next leg down. Okay. but gotta let the price action guide you. Speaking of breakouts, Dow Jones is showing follow through. We got the breakout similar to the SPY. Today, it recaptured that 325.5. I said that was a big level yesterday. It cleared that level, closed above it. So if it opens above that tomorrow, that is then support. And as long as it holds, I am bullish, and 330.6 is in play, possibly higher. All right. If we lose that level, that's a false breakout, and it'll put lower downside targets in play back to 921.2-ish and maybe 318.3-ish. Okay. And here's IWM. Cleared a very critical level at 180.78. All right. I had a candle here on May 17th. The close of that candle was around 182.64. And today's close is around there the same. So possible double top. We got to be careful here. All right. If it loses that 180.78 support, that's a good sign of more downside. Okay. Ride the wave down. There's a critical resistance at 183.8. If we can clear that, that'll be a breakout of this yellow trend line that I got putting 185.4 in play and possibly 190.5. Okay, guys. Apple, very strong, big body green candle here. All right. That's like an outside day candle if I've ever seen one. So I have support for Apple at 143.2. Okay. It closed above that level. That level needs to hold to put a test of 145.3, then possibly 146.6 in play, okay? And then the big one around 148.5-ish. If we could clear that, that would be very bullish, and we could possibly test the trend line of this blue trend line. It connects many highs to April 4th high, to April 21st high, to the May 4th high. So let's see if we can get a fourth touch, okay? And this line, getting a fourth touch could possibly break out of it, but we'll see. Apple would need to get above 154.5 minimum to be bullish, okay? As of right now, it's just in relief rally mode, okay? Watch that 143 support level, 141.6 below that, then 138.7, okay? Turn bearish if we start losing support levels, guys. All right? Try to be unbiased about it. But as long as it holds, we could possibly go and test more upside targets. Like I said, 145.4, 146.7 or 6s. And then 148.4. All right, guys. Level to level. And Tesla looking bullish. All right. I mentioned turn bullish if we can clear that 644 level. I think I said that yesterday. We definitely cleared it yesterday. Closed above it and showed follow through. I had a level around 682-ish. We cleared that, which I mentioned should put 700 and 715 in play. It actually went as high as 718.6. Before pulling back down to 707-ish, okay? So the critical support right now is around 700.5. As long as it holds, I think we can go back and test 745.5 and possibly 765, okay? I will turn bearish, well, short-term bearish, if we lose that 700.5 level. Can play it back down to 682-ish. And then below 644, I'm favoring new lows. So the last previous low was around 623, 620.5. I think we could get lower than that, possibly into the 500s. All right, guys? So that's what I have for you guys today. I am a little bit under the weather today, but I couldn't leave you guys hanging. Got to drop the knowledge and the price action plan for tomorrow. Okay, I hope you guys caught it. I hope you guys understand what I'm saying. So thank you guys for watching. Have a nice one. Peace.